yeah, BYD really ramping up its efforts in driver-assisted software, something that Tesla has really pushed forward with its so-called full self-driving.
We knew that Lyft and Mobileye were teaming up. What's really new today is the timing.
It's a battle between the bulls and the bears, which is what we've kind of seen play out with the stock price too.
All that and more. So let's get to it. Tesla stock is down again in the pre-market, a little over 0.5%, currently sitting at $348.50. Now I'm hearing quite a bit of panic when it comes to TSLA. Bear market territory, they say. Now, of course, year to date, Tesla is down a little over 10%. But let's not forget that if we go back an entire calendar year, Tesla is still up over 80%. Last I checked, that's not too shabby. But there may indeed be some cause for concern, considering EV competition is ramping up, especially in China. But now we are hearing tale of yet another form of competition in the autonomous ride-hail space. Will Tesla be able to differentiate themselves from the so-called competition?
Have seen the market gyrations around recalculations over AI models because of Deepseek. How significant is this development?
For BYD, this is yet another addition into enhancing its EV lineup, and its integration of the Deepseek AI is just one of a number of things it announced at an event last night to really sharpen its edge in driver-assisted software, for example, particularly around how its cars can be far more advanced in terms of how it can be used on the roads with more automation to an extent. And so therefore, its ability to add these kind of features to really upgrade the tech in its cars is a significant one in the main. But the Deepseek component is an extra cherry on top here, basically. So yeah, BYD really ramping up its efforts in driver-assisted software, something that Tesla has really pushed forward with its so-called full self-driving, and really opens up a new front in this huge amount of competition coming out of China and in China for more advanced technologies in EVs.
Somebody better try to integrate Deepseek into their vehicles since we can't. Who better than BYD? Now, time will tell if this holds any sort of advantage when you're talking about pushing battery electric vehicles over there in China, considering they didn't really give a timeline at that event. But it would be nice to see Tesla incorporate Grok into its vehicles over here in North America to get an idea of what this could mean for BYD and others who seek to add LLMs to their vehicle lineups. You'd like to think integrating this type of intelligence to the car would make it incredibly easier for it to navigate city streets and highways. Coupled with the right self-driving software, not only would you be able to save so many lives, you'd probably be sitting on a golden egg, ready to transform transportation as we know it. Despite BYD not being able to play in the sandbox over here in the United States, there's still a level of domestic competition.
Let's start with Lyft. We were just talking about it. The company's about to report its earnings, but the shares are up ahead of that today. After a report, the ride-hailing company is planning to bring its fully autonomous robotaxis powered by MOBILEYE to its app as soon as 2026 in Dallas, with more markets to follow. And the news comes a day before Lyft, as we've been mentioning, reports its fourth quarter financial results, coinciding, by the way, with Waymo's plans to launch a commercial robotaxi service with Uber in Austin and later Atlanta. Tesla has also shared plans to start an autonomous ride-hail operation in Austin in June. So that lays out the competitive landscape. We knew that Lyft and Mobileye were teaming up. What's really new today is the timing and another partner, a Japanese company called Marubeni, that is going to manage the fleet.
A lot of chefs in the kitchen when it comes to Lyft, and we're looking at a date of 2026. Now, I'm all for getting humans off the road, removing the human element from the task of driving. 40K plus deaths on US highways alone. It's high time we start bringing that number down drastically, and the only way to do it is to remove the human element. So in that regard, I wish them the best of luck, but after utilizing FSD for a few years now, Tesla has a tendency to make things look effortless. But I'm here to tell you folks, it's not as easy as Tesla makes it look. Given their unique sensor suite solution, it's gonna look like Tesla deployed a little bit of magic in the great state of Texas.
What's also interesting is, as analysts were pointing out today too, right now Texas seems to be sort of, as they were knowing to their clients, kind of the center of autonomy, right? I mean, it's Aurora, we've got Tesla there, and I got Lyft and MOBILEYE. It's interesting how, I mean, you would expect it to keep expanding.
What is it about?
Something about the Lone Star State.
I don't know. I'm thinking about like topography of. I mean, Dallas is pretty flat.
Regulatory backdrop probably doesn't hurt.
It probably doesn't. I guess that's the deal.
Texas, our Texas, all hail the mighty state. It's not the topography over there, Julie. With the great state of Texas, you get one essential ingredient: a lack of regulation for autonomy. But why wouldn't you want to be in such a diverse state? I mean, you've got snow, you've got rain, you've got hills, you've got plains. Texas has a little bit of everything to ensure that your autonomous driving software can function anywhere, not only in the United States, but around the world. Me? I'm a satisfied customer for sure. But some of these Wall Street analysts, they have their doubts.
Time to talk Tesla. The stock's pulled back pretty significantly from those December all-time highs. A couple of notes out there today floating around on Tesla, Caroline, but it just continues to be that choppy trade, and I probably expect that to continue, right?
Well, we're certainly seeing that choppiness today. Tesla on pace for its fourth straight day of declines, but really bouncing back and forth across the unchanged line right now. That being said, certainly a laggard of the Mag 7 so far in 2025. Tesla shares down about 10% year to date. Though one of the calls from an analyst still very much a bull, but trimming their price target. That's Stifel deciding to cut their price target down to 474 from 492, kept a buy rating. So Tesla's currently trading around 360 right now, so still about 30% plus upside from current levels, but scaling back expectations nonetheless, based on what they called mixed Q4 results, stiff Chinese competition, pricing headwinds, uncertainty around the Trump administration. Also, low favorability ratings for the brand, which it says could hurt near-term sales. Says that's likely linked to Elon Musk's political involvement, but their latest survey shows Tesla's net favorability ratings slid close to all-time lows recently.
None. And I repeat, I have none of those concerns. What else you got for me, Stifel?
Sticking with the buy rating based on several bullish factors as well, including record low Q4 cost of goods sold per unit, a lower priced vehicle coming out in 2025, Optimus production ramping up in 2025 as well, a robust outlook for energy storage, and then unsupervised full self-driving expected to make its public debut in June. So we know there's a lot of bullishness around FSD.
You're damn right.
Meanwhile, Needham is less optimistic, sticking with the hold rating, but said after it, went through and reviewed Tesla's model, says growth levers like FSD, ROBOTAXI, robotics actually look more priced in than not. And the analyst still sees Tesla as an expensive stock and says it's operating from a trailing position in autonomous rideshare.
What? Somebody please tell me, how the hell is this already priced in a multi-trillion-dollar opportunity? When it comes to the robotics, there's no way you think this is already priced in. And if it is, it's priced in pretty poorly.
So no price target given from Needham, but definitely some cautious commentary.
But the downgrades, the news flow doesn't favor Tesla right now. The politics doesn't favor Elon Musk's popularity right now, and until they can change some of the narrative from cars to other things like full self-driving and other things, this stock could remain under pressure.
Sounds like a lot of unnecessary fear to me. Emotional news reporting that paints Elon Musk as a villain. I ain't worried about none of that. None of that. The only thing I'm concerned with is whether or not I'm a satisfied Tesla customer. Are the products Tesla puts out changing my life for the better? Is it making my life easier? What are their future plans to further accelerate the advent of sustainable energy? Is that going to be successful? And more importantly, when it comes to my stock, is it going to be profitable? None of this fear, uncertainty, and doubt pushed by the legacy media outlets has altered my outlook for Tesla in 2035. Needless to say, I still believe that Tesla is going to be the most valuable company in a decade's time.
Yeah, and I think the bulls very much cling on to that FSD autonomous AI story. I was talking to Garrett Nelson over at CFRA last week. He has the second highest price target on Tesla behind Dan Ives over at Wedbush. So his price target is 540. And he remains bullish all about the regulatory approvals and framework related to FSD, which Elon Musk's connection to President Trump, according to him, is actually a positive. So he says it's still trading at a fraction of the market opportunity, which he estimates to be north of $5 trillion in terms of global autonomous, the global autonomous driving opportunity. So he said he would be, a buyer of the dip that we've been seeing from Tesla. Now he thinks the EV part is priced in to the Tesla story, unlike Needham, who thinks the FSD portion might be priced in. So it really, depends on how you look at it. Garrett Nelson says that investors, for the most part, have really been able to look past some of the noise in terms of the downbeat numbers that we saw in terms of not just Tesla's Q4 results, but also the numbers coming out of China. January deliveries fell 11%. The numbers out of Germany appeared weak. But he said Tesla has done a good job of keeping investors focused on the longer term and, the growth opportunity there. Maybe they're starting to focus on the nearer term, and that's why we're seeing some of this weakness. But as we've seen with Tesla, you certainly can't underestimate it. I will say the median price target is actually higher than it was last month. It's now 335. It was at 285 at this time last month, but that's still below where it's currently trading. That said, we know analysts have been mixed on this name for quite some time. The high is at 550 from Dan Ives, the low with Gordon Johnson over at just below 25. But there are some, $135 price targets there as well. So, it's a battle between the bulls and the bears, which is what we've kind of seen play out with the stock price too. So, losing out the past few days, losing out so far in 2025, but, we'll certainly see.
Yeah, and then you throw in the humanoid robots, Optimus. Elon Musk said on his conference call that could be a $10 trillion market for those, and I know they're ramping up, those.
In conclusion, I remember not too long ago that the competition was coming when it comes to EVs. Here we are half a decade later and Tesla is still exerting their dominance over the EV industry. Now the legacy media is turning up the volume on the autonomous ride-hail competition Tesla will face, not only here domestically, but abroad as well. BYD integrating Deepseek into their vehicles? Oh my, whatever will Tesla do? Answer, any and everything to achieve the mission. Lyft wants to have their autonomous ride-hail in Dallas by 2026? We will see. But as I continue to use Tesla's latest and greatest versions of their software, it is obvious to me that there is nobody close to what Tesla is capable of doing. Not only are they increasing the driver capabilities, making the ride as smooth as humanly possible, they continue to add features left, right, and center that makes Tesla's unsupervised full self-driving more of a reality than ever before. I'm of the opinion that Tesla's current value of about $350 per share has their global EV dominance baked into the stock. But as far as the ride-hail, robotics aspect of this company, we're not even scratching the surface of what the value of this company could really be. That's all I've got for you today. Be easy. Peace.